Last week, we saw the stock market come crashing lower. Is this the beginning of a bear market, or are stocks about to go ahead and rally up to new all-time highs? And we're going to talk about this famous Black Swan investors stock market warning, and it may not be what you think. Now, on Friday, we saw the fear and greed index tick down to 49. We're almost dead smack between fear and between greed. Then we look at the most recent investor sentiment survey, and we had a very hot reading once again, 52.7. Now, is that going to change after the week that we saw this week in the stock market? Now, before we jump into the charts, I want to share with you guys this stat. And what it goes on to say is July monthly option expiration performance since 1982. And what it goes on to show is I want you guys to pay attention to the week after. And this is for the NASDAQ. If we look, we've been up 21 times. We have been down 21 times. So essentially, it's going to be a coin flip in terms of will the bulls or will the bears win? But we do have several clues that we can pay very close attention to this week. And here's something that's probably on a lot of traders and investors' minds. Tech took down the world on Friday. Is the stock market next? And when we talk about tech, more specifically, let's talk about CrowdStrike. CrowdStrike on the weekly chart, yikes, that was one heck of a massive candle on the way down. But were there any signs ahead of time? Yes, there were. Look at the MACD indicator. Peaked out right around this peak here. However, price went up, making another high. However, the MACD indicator simply did not confirm it. Now, on the weekly chart, we have divergence on the MACD indicator, and we got a fresh cross to the downside, which means there could be a lot more room to run. Now, similar to the NASDAQ on the daily chart, look at what we have on CrowdStrike on the weekly chart. Left shoulder, head. Will we pop up to form some type of right shoulder in the very near future? We look at CrowdStrike out here on the daily chart, and we can see on Friday it was down 11%, absolutely getting destroyed. And I got to be honest with you, if CrowdStrike wouldn't have been down as much as it was, then I do think the NASDAQ would have fared a little bit better. However, when we look at the dollar index is starting to bounce. Is this the beginning of a much larger move in the dollar index? As we looked at, we only have 10 more days as we're recording this video until the next FOMC meeting. And we got to ask ourselves, with the market pricing in the Fed starting to aggressively cut rates, does the market have it wrong? If you guys remember, this chart at the beginning of the year was forecasting 6 to 7 rate cuts out here in 2024. And here we are, we're in the middle of July, and we've had 0 rate cuts so far. Now, before we take a look at what the famous Black Swan investor said, let's go ahead and take a look at the 10-year yield. We look at TNX. We can see we're in a downtrend. We have a declining trend line. And now the question is, are we about to bounce back up? We can also see we have a series of lower lows. Here's a low, lower low, lower low, but this low right here did not really push much past the low like we saw over here. Also, look at the 10-year yield. What do we see? The MACD indicator has divergence. And keep in mind, if the yields start to rise, that is going to be problematic. Then we look at the volatility index. What do we see? On Friday, we're up 3.71%. And I think this big wick on the way down was nothing more than a bad tick. And I've been warning you guys, when we're down near 52-week lows, we had to be careful for a volatility spike, which could occur at any moment. And that's exactly what unfolded out here this week. Now, what else could be a source of volatility in the markets? Well, if you said the election's coming up, you would be absolutely right. And this time around, it's just not a matter of who is going to be president. But right now, we don't even know if Biden is going to be the Democratic nomination. And keep in mind, the market hates uncertainty. So is this going to breed more volatility out in the markets this week? Let me know your thoughts in the comment section down below. And if you're not yet subscribed to the channel, hit the subscribe button down below and give the video a big thumbs up. Some of you guys have been asking me about the stock arm. Now, this looks very similar to what we see with the NASDAQ, where we can have potential left shoulder, head, right shoulder over here. Now, if ARM is indeed going to continue its ascent up higher, it must be able to come back over and close the gap. And I believe if this gap gets filled at about 178.80, at that point, we're probably going to see ARM making a run towards all-time highs. You can see on Friday, ARM basically has an inside day, meaning the high was lower than the high from the prior day. The low was higher than the low from the prior day. However, there is something a little bit concerning because when we look down here at the MACD indicator, we can see we basically have a little bit of divergence that played out. when you look at how the MACD peaked out right over here, it's basically at the same level as the peak over here, just slightly lower, which is showing us the momentum to the upside was already starting to weaken. Then over the last couple of days, we've actually seen the MACD indicator turn bearish. And we're going to see, do we simply consolidate around this level, or do we start to bounce back up, or is there going to be more trouble up ahead? Now, let's take a look at what the famous Black Swan investor had to say. I want to make everybody aware, Apex 7 a massive 80% sale off all their valuation accounts, passing as little as 1 day, and you can also get a 150K account for only $40. You get a 250K account for only $40, and you get a 300K account for only $40. So if you want to take advantage of this offer, use the link in the description box down below and use the promo code Mike at checkout. Now, as we take a look at what the famous Black Swan investor had to say, the greatest bubble is nearing its peak. And however, I want you guys to pay very close attention. No, he's not saying this stock market is going to crash tomorrow, but this man, Mark, and I cannot even act like I can pronounce his last name, has made billions from past crashes. Well, what about when the stock market is rallying up? And does he think the market still has more legs? Now, as he does say, he does see a major sell-off approaching, with stocks potentially losing more than half their value. Now imagine the S&P 500 losing 50% of its value. That would bring the S&P 500 to about 2828. Now, he does go on to say, I think we're on a way to something really, really bad. But of course, I would say that as he joked. And why would he say that? Because his fund that he manages is all about Black Swan events. But what else he goes on to say is he thinks the rally will continue for months and get even wilder. So if you guys think the stock market has topped, this famous Black Swan investor still thinks the market could potentially have legs. Something else he goes on to say is, he says another contrarian sign, some holdouts and investing communities remain cautious. Now, until recently, that is in May, Morgan Stanley strategist Mike Wilson turned bullish shortly after losing his spot on the firm's Global Investment Committee. And recently, JP Morgan's Marko Kolanovic, who stuck to his pessimistic guns through the AI rally, lost his job. Fund managers who haven't jumped on the AI bandwagon, owning stocks like Nvidia, are licking their wounds. Now, here's what's very interesting. These episodes have echoes of dot-com boom in late 1999, before the S&P 500 peak. Merrill Lynch bearish strategist Charles left the firm. We've already seen the Wilsons and Kolanovics already starting to have to jump ship or forced out or demoted or something along those lines. And again, this leads to the case that we could be very near the topping of the market. However, the market normally goes a lot further than what we think it can go. Now, as we come over and look at the S&P 500, looking for clues in terms of, should we expect more downside pressure this week? We start off looking at the weekly chart. When we look at the MACD indicator, we can see we've had a little bit of divergence as of recently, as prices made new all-time highs. The MACD indicator, one, simply has not been confirming it. Now, when we look at how last week's candle closed, we closed near the lower end of the range, and this was actually a bearish engulfing candle. We can see the opening price was above the previous candle's closing price. Then we closed substantially lower than even the low from last week. So that is one check mark off for the bears in the market. Now, we look at the composite profile, we got to pay attention to this distribution area right here. Keep in mind, it's very common for the S&P 500 to have a 5% pullback about 3 times per year. Now, 5% pullback would bring us somewhere in the ballpark of about 536. Now, the question is, with the uncertainty, with the elections and everything else going on, could this be the time where we actually see a more along the lines of a 10% correction, which would bring the SPY to about 507? Or is this going to be the start of a stock market crash, and the Black Swan investor is actually going to make coin off this move? We look out here on the daily chart, and you can see we basically had 1, 2, 3 down days in a row, and now we're starting to get into some high volume areas on the composite profile, something we most certainly want to pay attention to. On the daily chart, look at the MACD indicator. It is crossed to the downside at elevated levels, something to note. So what does this mean? Well, there could be more downside pressure to come. However, I'm also favoring that we could potentially set up some type of head and shoulders pattern. This would be a little bit more elongated than I normally like to see, but left shoulder, head, potentially some type of right shoulder over here. And one of the areas I want to watch is look at this minus development area within the profile. This is going to act as a magnet. Now, if we do make it down into this area, this is going to be a rejection point the first time. We'll see if we can come back up towards this high volume area, maybe clear it, or if we reject and come back down. Now, if we come into the minus development area more than once, expect it to break. And if we look over to the left, that minus development area correlates very well to a gap. And let's not forget, we've had a lot of gaps on the way up, and we know gaps tend to get filled. However, not always on the very next day or even very next week. Now, as we come over and look at the weekly profiles, notice we have one of my favorite volume profile setups setting up. What do? We close well below value area lows. So what does that set up? It is highly probable that sometime this week, we're going to make another run up to test out that level. Keep in mind though, just below us, we do have an untested point of control from our prior week down here at 5530.50. We also have this high volume area over here. Now, if the market does start to bounce, I do like this volume distribution area of the profile for a potential bounce on the way back up in the ballpark of a retest of value area low. Now, one thing to note, I'm going to have my eyes focused on this minus development area this week as well. And the reason for that is we could simply, the first time we come into this area, we could get a rejection on the way back down, and we'll see how all that shakes out. Now, if we pull a basic Fibonacci retracement from the swing high down here towards the swing low, notice that minus development area comes in right at the 61.8 Fibonacci level. That's not an uncommon retracement level for the S&P 500 to retrace. Now, if we do start to breach above that area, that's where I'm going to want to focus on this next high volume area on the composite profile and see, can we make it back up towards that area somewhere around 56.40. Now, when we look at the volume profile levels on the weekly, value area low is going to come in at 5602.50. The point of control will come in at 5648.50, and value area high is all the way up here at 5721.25. And I would be highly surprised if we were able to make it all the way up here, the value area high. I think that is a little bit of a stretch at this moment. We come over and we look at the daily profiles. Notice we closed near the lows on Friday. And from a daily perspective, we do have a point of control down here that has not been tested at 5533.50. Also, when we look at the daily profiles, value area low will come in at 5545.25. The point of control will be 5549.25. Value area high is going to be 5579.75. Now, if you look on Friday, we did have less of a range than what we saw on Thursday. So we're going to see, do we start to get a bounce this week, or do we simply continue to cascade lower? One thing I'll mention, which I talked about in Friday's video, is we always need a plan B. So even if you think the market is going to bounce, you do not want to be static in the market and say, you know what, we can only bounce. You want to go ahead and trade with the evidence that is presented to us. So if we are trading below value area low, I want to look on the sell side of the market. If we are above it, I do want to look for some upside tests and watch out for this minus development area right over here, because that could be an area where the market rejects back down. That's basically which correlates right here, very near the wick of this 30-minute candle. And we're going to see, do we come up here, we reject back down? If we get a small rejection back down, we start pushing back up, the second time we're probably going to push through it. And let's not forget about that minus development area that we have out here as well. Now, that minus development area I will be watching this week, 56.17 to about 56.22. This one should act as a magnet, and the first time that we interact with that level, normally we'll get some type of reaction. We'll see, is it just a minor pullback and then we run to push through it, or is it a much deeper pullback and then we build cause and come back up through it once again? In the event that sometime Sunday or Monday, we start trading above value area high, then if we start coming back down below it, I need to go ahead and negate the buy side thesis and say, you know what? As long as we're back below that level, I then need to be on the sell side of the markets. Now, if we look at the economic calendar for this week, what do we see? Well, Sunday night, China has their 1-year loan prime rate, 5-year loan prime rate. Then on Monday, we have no news. There are no flags whatsoever. On Tuesday, we have existing home sales, Richmond Manufacturing Index. Then on Wednesday, we have flash manufacturing PMI at 945. Then at 10 a.m., we have new home sales. We have crude oil inventory numbers. We do have a few FOMC members speaking as well. Then on Thursday, we have the weekly unemployment claims, advanced GDP, core durable good orders. And look, the weekly unemployment claims are expected to come in hot at 239,000. Last week, we had a rise of 243,000. Then on Friday, we're going to find out if indeed inflation is coming down, because we have the Feds preferred measure of inflation, which is going to be the core PCE price index, which will be coming out here at 8:30 a.m. Now, as we look at the QQQs on the weekly chart, we had basically a doji or spinning top type of candle the prior week. Then this week, we kind of get a bearish engulfing looking candle. We closed near the lows of the session. Check one off for the bears. Then we look at the MACD indicator. We can see as we made a new high, the MACD indicator just basically retested the prior high where it was at. That was a sign, a clue that momentum to the upside was starting to weaken. Now, I do have my attention focused on some of this high volume area, somewhere around 438.43. That's really capturing my attention. Then if we measure from the high down here towards that area, that'd be about a 13% correction. And I don't know that that is going to be in the cards just yet for the NASDAQ. And as we come over and look at the daily chart, we can see this a little bit more clearly. Left shoulder, head. Do we form some type of right shoulder? And I do want to be very, very cautious, because if we can come all the way up here, fill in the gap at 496.32, then I think the QQQs are going to make a run to new all-time highs. The MACD indicator on the daily chart is extremely bearish. We have a good separation of the lines with about a 45-degree angle to the downside. And there's a lot more room to run just to get to the zero line. And let's not forget, we can get one heck of a nasty sell-off, especially with everything going on with the elections, with tech stocks, all that fun stuff, the dollar starting to rise, and even the yield curve trying to uninvert. Now, we do still have a ways to go, but that's something we are going to want to keep our eyes on moving forward. Now, when we come over and look at the NASDAQ, one thing to note, right over here on the composite profile, we're right on the edge of this minus development area. Now, this is an area where I expect to get a reaction, and notice we close well below value area low, which is going to come in at a price point of 19,928.25. The point of control will be up here at 20,625.25. Value area high is going to be up here at 20,796.75. Now, if you notice, this is one of the largest range in weeks I think we've had all year. We had 1,143 points of movement in the NASDAQ. And the last time we had a range that large was actually over here in the middle of April. So this is one heck of a move that we had out here this week. And the question is, we have a lot of minus development areas within the profile. Are we going to make our way up trying to retrace some of that movement, or do we just continue to cascade lower? Now, this week, I will be favoring a retest of value area low. So we most certainly want to pay very close attention to that level off the weekly chart. Then as we look at the daily charts, I want you guys to pay attention. Notice where the low was on Thursday, and notice where the low was on Friday. It was not substantially lower. That is a very good clue that maybe, just maybe, we're going to go ahead and try to pop up here just a bit. Now, from a daily chart, on the daily profiles, we have value area low coming at 19,670.75. The point of control will be 19,704.75. Value area high will be 19,856.25. Now, one thing I would prefer is Sunday night, we get a gap down, breaking the low, and then we recover those lows and get back above value area low. That would do two things. One, it would go ahead and run any stops that were sitting down here below the lows. And then as we got back above value area low, that would set up a volume profile rotation trade, which says we could continue up higher, all the way up here towards value area high and potentially higher towards some of these high volume areas that we have on the composite profile. Now, if you guys are trading off the profiles, just be well aware of any of these minus development areas within the profile. The first time we interact with those levels, we can get rejections out here in the market. So pay very close attention. Now, also on the weekly chart, I forgot to mention, we do have an untested point of control down here at 19,358.25. If we go ahead and we measure all the way up here from the high down here towards the low, this has been a 1,332 point drop. And then as we come over and we look at the percentage drop in the futures markets, it's 6.35%. Is there more to come? We know AI stocks like NVIDIA have most certainly been hyped up. This parabolic move cannot sustain. Now, if this month closes like we are now, that will be 2 months back to back with some nasty selling tails on top of these candles. However, let's not count the bulls out yet, because for all we know, NVIDIA could come rallying all the way back up and essentially make this candle close near the high. And then that way, that would negate any type of wick that we have on this week. Also, we take a look at Apple. Apple was green on Friday, and tech stocks were down substantially. We look at Google on Friday, which was a down market. What do we see? Google was up 17 cents, and Google essentially formed an inside day, which means on Monday, we're likely going to get a breakout or breakdown from this pattern. Now, if you guys want to learn an easy way to trade volume profile using order flow, watch this video right here.